Good morning, everyone, and welcome to the European crossover webinar. And let me load up the bias chart. Did a restart on the computer. Hope it shaved yesterday's bias chart. Hang on. Be just one moment. Okay. Obviously, I mean, if y'all are around here, and it was late in the day at U.S. session, we saw a bit of a roller coaster. I mean, Williams would come on, and I mean, obviously that's old news by now, but we had really got the market rolling with the thought that the market he had put on there was safer to have a 50 basis point cut. I think his words were to avoid disaster, whatever, and really sent the market going in all kinds of directions. The S&P's rallying to new all-time highs, gold rallying like crazy, and the dollar selling off, the euro rallying up here, and then once the new session came in, then all of a sudden the Fed came in, the New York Fed saying, well, he didn't mean it that way. He meant it theoretically. It was from a policy, what do you call it, standpoint or whatever. But anyway, everything started to turn around and roll the other way. And boy, the market really rolled the market and had people very, very upset. It was to a certain extent, it was kind of humorous. Blake had mentioned on there, I saw in the chat room, he said, when he posted that, and by then the euro was already starting to slide down. I'm thinking, it started sliding back. I'm like, well, God, I should just probably, maybe they're going to push this even further. And I got short. It was a little bit late, but the market keeps on selling off. And I jumped out, and I'm pretty proud of myself. And then it just keeps on selling up. I'm like, holy smokes, I jumped out too soon. And then we keep on selling off. So it was kind of humorous in a sense because, everybody's just reeling from what it had just happened, and gold had opened, had moved, so much higher. And then same thing, gold turns around and starts selling off too. So interesting kind of move, but it was some kind of a move, and really upset a lot of people. It's just, I think sometimes you have to kind of laugh at it, but I guess if some people were stopped out with losses, I don't think it was too funny for them. I know with me with the peso, I was long. I had add on at least I think I came in I'm trying to remember. I think I came in at 1902 if I remember correctly, and then I added on this dip below 19. And then I had a chance to get out on a quick scalp, and I didn't. And then so I ended up getting stopped out at 1896, I think it was. But it was already starting to fall because of that. But I was able to catch some of this on the dollar yen. I was kind of ticked off. I left a lot of money on the table after it also fell. Then it turned around and rip roars back. But all in all, I came out okay. But I tell you what, it wasn't too fun for people that may have got stopped out, only to see they got stopped out for what was supposedly, just a theoretical point of view, which did make no sense because, in this type of situation, the market's going to be hanging on to the, every word. And as we're getting closer to the date for FOMC, and then to make that kind of statement and then say, well, I'm only theoretically speaking, really is, somewhat inexcusable. But we're going to get on to the news, and thank God it's Friday. Let's see here, going to the morning bid. You see, I don't want to go over any politics. I'm not interested in any of that stuff. Okay, it's pretty clear that central banks are preparing for a heavy cutting cycle. The only question are whether it starts this month or later, and whether cuts will start at a normal pace, 25 basis points for the Fed, 10 basis points for the ECB, or whether the banks will opt for bigger moves to preempt economic downturn. Comments from New York's Fed John Williams suggested yesterday the cut would be bigger and sooner, and though the Fed later rode back a bit on that view. Japan's inflation data underwhelmed, coming in 2-year lows with the core inflation at half tenth. That means the Bank of Japan is likely to cut rates too, possibly from September. Years of negative interest rates and money printing haven't lifted inflation, so it's unclear whether more can do the trick. Anyway, the promise of a rate cut deluge has done the trick already to some extent. The dovish comments by the officials, Williams and Richard Clarida, late on Thursday sent Wall Street higher and pushed the dollar and Treasury yields lower. The U.S. yield curve has steepened in recent days. The gap between 3-month and 10-year yields is more or less zero. It was wide as 30 basis points a few weeks ago. This has kept the momentum going in Asia and Europe, with world stocks up 0.3, and Asia enjoying even bigger gains of 1% to 2%. On currency markets, the dollar reacted dramatically in the comments from Fed Williams, falling 0.5% against currency basket to 2-week lows and 0.6 against the yen. This morning, it's climbed off the levels, and the yen has weakened today 0.3 to the dollar. The dollar's weakness has lifted emerging market currencies. In Europe, markets are mindful of rumors after a Bloomberg source-based report that the ECB could be looking to revamp its inflation target, which will allow it to cut rates and hold them low for longer. The hopes have extended in a Eurozone bond rally, with peripheral Europe enjoying the biggest gains in German 10-year bond yields, set to end Friday with the biggest weekly decline in 7 weeks. Sterling rallied off its best day since early May after lawmakers voted to make it harder for the incoming prime minister to prorogue parliament to push through a hard Brexit. The respite was brief, however. The pound, which has fallen some 6% since mid-May, resumed its decline this morning against the dollar and the euro. With little data significant today, earnings remain in focus. BlackRock's street name and Amex post results later in the day. European equities are regaining some of the ground lost yesterday, rising more than 0.5%. Australian New Zealand dollars are at multi-month highs on Fed rate fever. The Australian New Zealand dollars hit multi-month highs on Friday as market speculation on aggressive U.S. Fed rate cuts reached fever pitch following the dovish comments from Federal Reserve policymakers. The Aussie was up at 70.73, a level not seen since late April. Kiwi, its highest at 67.89, was last traded at 67.82. New York representative later said the speech was academic in nature and not about potential policy actions. Yen's futures were implying a 44% chance futures were implying a 44% chance the Fed would cut a drastic 50 basis points this month, up from almost zero a couple of weeks ago. That left Treasury yields down sharply for the week, while European yields fell further in reports the ECB might make its inflation target more flexible. And we'll close on the dollar. I thought because the Aussie and New Zealand dollars were making new highs, that I'm going to go and touch base, and it wasn't even very long, but I thought it was key to go and notate note it, I should say. Dollar on the back foot after Fed shores up bets on large rate cut. The dollar stayed on Friday, but was still on the defensive after Federal Reserve officials bolstered expectations of an aggressive rate cut this month to address weakening price pressures. Thursday, Fed John Williams argued for preemptive measures to avoid having to deal with too low inflation and inflation rates. That sent the dollar down before it's bounced slightly in Asian trading, and after a New York Fed representative subsequently said Williams' comments were academic and not about immediate policy direction. Still, investors took his remarks along with separate comments from Fed Vice Chair Richard Clarida as another dovish signal from the central bank. The greenback fell broadly on Thursday after Williams' remarks bolstered bets the Fed would cut interest rates by 50 basis points. Financial markets reacted quickly, with money markets pricing in almost a 70% chance of a 70 basis point cut. Wow. Williams' comments were surprisingly dovish. The New York Fed went all the way to try to modify the message, but no one seems to have done so for Clarida, who also said a very similar thing, said Daisuke Uno. Let's see here. And Elsewhere, the pound remained stronger than expected. UK retail sales numbers after British lawmakers on Thursday approved proposals to make it harder for the next prime minister to force through a no-deal Brexit by suspending Parliament. Okay, and we do have Canadian retail sales later today and University of Michigan preliminary, so that'll help move the market. Um, and let's see. And looking at the euro, well, you can see this 1285 cap this year. Now, when we were making that run yesterday, um, before they even made the announcement, I had referenced, I go, we might have a tough time for the euro. I said, it may not, I go, a tough time going beyond that. Of course, we had this 1285, but I was noting the boon, which was challenging at the time. I go, the euro may have a tough time getting much higher or something like that. And I go, as the boon is just a spit away from new all-time highs again. And this kept the market in check. And then, of course, as I said, then the market closed. And then when we came back, then that's when the Fed came in and started saying what they said, and they say, the euro's selling off. And but let's go and move into the 2-hour chart. Obviously, this 1285 is just huge. Nothing's going to change that. We've been talking about that for quite some time. So like this here. We've mentioned that before, is that it's important that the market was able to regain 1262. And I thought, as I said before, I thought the 1285 was just a mile marker on the way up to going up towards 1326. And it turned out to be a formidable ceiling, and we just haven't been able to take it out. Even with yesterday's dollar sell-off, the euro couldn't even take that out. So it's 1285. On the downside, well, the market seems bent to stay with what happened with yesterday, with nary a pullback, in the sense that, especially it's late also in the week. Obviously, it's Friday. Had this been Tuesday, then maybe we could see, okay, now the year's starting to slide back. Maybe it's going to pull down here and come down and test 30 or 20s. But in light of the Friday, and a lot of people got knocked out of their situations, I think the market's not going to turn around and put on brand new positions at this point. So I think we'd look for this area to hold in here, which is 1239 right there. We'll highlight that. There you go, 1239. Okay, let's go and move into the cable. Just one moment. Well, we saw a nice little rebound here in the cable, and we did make it above 25.26. Let's go and take a look at it here on a 2-hour chart. And we had this 24.79. That was kind of keeping the market in check. Look at that here. We've gotten above it, but it was still keeping the market in check. But I tell you what, once that whole thing with John Williams came up, boy, that was just that really let the cat out of the bag, and boy, did the cat take off. So at this point, Resistance is going to be right there, 25.52. Support is going to come in right there. Let's move this just a hair lower. There. $24.96. Let's move that just a little bit lower. Right there. Let's go 24.95. Well, you can see here, we punched up against this 70.70, and we talked about this. It's opening, if we're going to close above this 70.27, okay, again, then that would open the door for 71.80. And that's what we're going to be looking for, 71.80. We did make it up here to this next level here at 70.70, but I think this opens the door for this move up here to 71.80. So, resistance, it's just going to come in right there at 71.02, right there. You can see that 71.02. It doesn't look like we're in any danger of hitting that, but that's what it'll be now for now. It's just going to make it just slightly above those highs. So maybe it's a little bit more than slightly, but we'll go with 71.02. And let's look for support. It's going to be right there, 70.24. Well, let's move just a hair low right. You see right here, 70.22. May even have a hard time getting anyone close there, but we shall see. Hard to think of the Aussie without a 6 in front of it. And we'll move into the Kiwi. Nothing there yet. Hang on. Boy, what a flyer this Kiwi's been. You see these little touches coming across, right across there, 68 cents. So it's going to be 68 cents for buy chart resistance. You see these touches coming right across there. You see that? 68 cents. right here. If it pulls back there, which is 67.32. There we go. Because this thing is up and away, so it's not even trying to correct. So, especially on a Friday, any kind of pullback, I don't think we're going to get it. But if we saw the big 40 pips lower, well, this certainly gave up the ghost here, which was the dollar CAD. We've had this 3077, and it's worked very well. Um, I caught like maybe one or two. I don't even think it was two. Might have even been one trade, and I probably should have jumped in a little bit more. I know people were looking for higher, and I just didn't see it. I mean, we saw this take out this 3077. I thought, okay, it can get a little bit higher than this, but I wouldn't expect it much. And look how we quickly gave that back. Well, we came and assaulted again. Then thinking, okay, now we're going to go much higher. And look, we turn around and roll back down the hill again. Now, obviously, John Williams had a lot to do with it on this, the extent of this fall. But I still felt the same thing. It's like 3077. I mean, maybe they can push a little bit hard, but I'm talking about if from where they were at now. But I just didn't really see it. But I will say this from a technical standpoint. I have to say this from a technical standpoint. Okay, like we were looking for a move down here at 30.90. I mean 29.95. It looked like it's a foregone conclusion the way we finished last week. So the idea that they had defended even going down there multiple times certainly did open the door for them to probably come all the way up here, much higher into the 31s, like the 31.40. But we weren't able to do it. And I made a point. I think it was on the daily wrap up. Here's crude oil coming all apart, and we're not even doing anything. I mean, we'd rally. That's why I did catch some of this on when it was going like that. I'm like, okay, well, might as well take advantage of it. But I jumped down. I didn't even grab that much. It was on a scalp. But I thought, this should be higher. And like I said, in some ways, I remember this kind of dipped back, and I was thinking kind of could have kicked myself because it kept. I think it dipped back a little bit twice, and then before it reasserted itself and it started to lose back the ground. I never participated on any of this stuff down here. But that being said, like, I thought that, yeah, you know what, maybe there is something. Maybe it is a little bit more than go beyond this in light of, how well, not so much about crude, because I thought that the crude, that was if the market was even performing. I mean, here was crude falling out of bed, and the dollar CAD's not even moving that much higher. But I thought, you know what? I got to give it its due. It didn't even come down close to that 29.95, and it's already had multiple times to go down there. So yeah, maybe we can go on and get a further squeeze up in here. Maybe not a true squeeze, but a little bit further shortcoming. And it failed miserably. Obviously, like I said, John Williams had a lot to do with this, but it failed miserably. Resistance is going to be right there at 30.62. This has been in place for the last 4 days and has held very well. Early in the morning, can't talk. Hang on a moment. By the time Friday comes around, I'm pretty doggone well pooped. Support is going to be 29.95. Our old target we had since the beginning of the week. Let's go to the dollar peso. Well, I mean, it looked like they were trying to make us. My thought was, and I'd been successful the prior couple of days, was just buying this thing on dips. And usually, I think I had to actually had to hold one overnight from the 2 days before, and I was able to get out there. What was it when we came on the air? Not we came on the air when I got up for the European crossover, and I was able to get out right before 1910. I thought, you know what, looks like I probably left money on the table, but oh well. And no, it ended up rolling over. I mean, it went beyond that. I think that was up to 1911 or so, or 1911 and change. And it looked like a good option again, but the obviously we just kept selling off on this thing. And John Williams, I picked it up just below this 19, and we rallied up to like 1902.4 because I remember I was looking for around on the first go round. I was looking for a quick scalp at 1902.7. Sounds crazy to go that low, but I remember looking at it and I go, if I can get that, and I think the market ran out of gas just right before 1902 or at '02, something like that. We came back and had another run. I go, okay, we're going to make it up to about 5, and I'll take that other portion off. And this thing rolled over. And of course, like I said, the rest is history. I got stopped out 1896. Let's go on and look where we're at now. You can see right here. Here's that 19023. There you go. Resistance right now is going to be, we'll call it 19027. Keep it pretty tight. No, they can probably blow through that. Let's just, I mean, go get above it. It's just the key is going to be that 5. We'll call it 5, 6. And support on the downside, 1894. And let's go to the dollar yen. I finally got around to doing a little bit of trading on this thing yesterday. I think it's going to be better to look at this on a 2-hour chart. Resistance is going to be right there, 790. Well, actually, just a hair a little bit higher. 796. That's probably too much. Let's go. Just go right there. 790. That actually worked out pretty good. That 797. As you can see here, the market rebounded, made it up to what, 801, and then turned around. We saw a pretty good fall. But it's going to be 790, and then see those touches come across there. That's going to be the next one. Well, it really coincides with that 832 we had in place for so long. Support on the downside. This market's opening to move in higher. I mean, lower overall, I meant to say. We'll just go with 730. I don't think we're going to get there, but anytime at all today, but that's what we'll have. I tell you what, you have to laugh about what happened yesterday. I don't know, unless some people took some big losses. That's not funny. I tell you what, it does seem like it's the Keystone Cops. It really does with this whole thing with the Fed. I think, boy, people are going to be jabbering about this today on Twitter. Boy, for good reason, but It's the old thing. You can't even make this stuff up. Um, Something else. Let's take a look here at the dollar. I'm gonna be curious to see what Steve's take is um, on Face webinar. I really am. Um, Axel Merck was made a thing on said something about Twitter, and I responded to that, or I put a retweet and added on here. It's the Banana Republic Fed because it's like unbelievable. Oh my goodness. Um, well, we haven't broken past this level. I mean, we certainly challenged it here yesterday. Um, well, we had all the way down to 96.68, and the low was 96.68. Let's go into the 2-hour chart. There's resistance right there, 97.06. And support will be 96.68. We're going to keep it pretty tight as a drum. See what happens. Same. That actually was a low. And then we'll move into the cross rates. Man, I'm glad it's the end of the week. But I am going to get a kick out of, I'm going to be following Twitter because I tell you what, it's going to be a lot of chatter today, a lot of chatter. Well, look at this New Zealand yen. It's up, up, and away. Look at that. We cleared 72.83. And this looks like this probably would have held the market a little bit in check here. But obviously, with the Fed saying they're wanting to, I mean, Williams did say 50 basis points cuts. I thought it was a little bit silly when he said to avoid disaster. Disaster, it's not like we're hanging on the brink or something like that. So you can see right here, this body close here. So that's going to be the next resistance level, 73.12 right there. You see that body touch coming across. Support. Support's going to be right there. I think we had it marked up before. It's still a ways away. It doesn't seem like likely that they would go down here. But that's going to be at 72.67. And let's go into the euro yen. We've been hugging the lows, remember? But let's go in and take a look at here on the 2-hour chart. It's going to be 2092, which isn't a whole lot lower, but it's going to be 2092. No change here. God, we have moved up a whole lot, really. Think about it. 2136 is going to remain the same. And let's get on to the Euro odd. Well, we're still here, way down here in the dumps. And not much of a range at all. You can see that. Not a whole lot. We'll move into the 2 hour. Well, I'm just going to go with the low, the actual low, which is going to be 59.15. Euro's going to have a tough time with these moons where they're at. Sheesh. 59.62. And with the Euro Kiwi, well, same thing. It's like it's somewhat similar to a certain extent with the Euro Aussie. And it's going to be right there. You see, coming across here, this little low there, 65.98. Not. And we'll just go with 66.49. I don't think we're going to get too much of a change today, but we'll lower this to 66.49. And let's go into the Aussie yen. And we're just going to go straight up here with this level, which is 76.19. The Aussie's been doing so well. Maybe we can push up a little bit higher, but right there. 76.39. 76.39 for the resistance. It's going to be 75.69. And with that, we'll go and move into the guppy. I'm trying to make a stand here. This is key here on the daily 34.18. Let's take a look on the 2-hour chart. Right here, there you go, right there, 34.32. We're bumping up against this resistance here. And we'll keep that in check, which is 34.98. And 97, that's fine. And we'll go to the sterling nod. We've talked about the disparity between these exponential moving averages. I mean, it stopped it from moving any lower at this point, but we haven't seen any kind of a rebound. But we can maybe we could see that next week. We'll see what happens. Not a huge rebound, but something here. It's going to be 76.82. On the upside, give it some room. 77.84. There's a pretty good upside, but if we get a little run here with that. Well, that takes us back here into the main screen. And boy, did we see, gold made it all the way up here into the, broke to 14.50, and then here we are down here to $12, but we have gone as low as around 14.37, 14.36 handle. We'll see what today. I think it's going to be, I don't expect any big moves. What's left of the market, I don't see the market turn around and trying to retrace in any significant way, like on the euro. Only thing is that the euro, we've got the bunds, close to those all-time highs again. But I don't think people are trying to press. We may try and make a push back a little bit towards these lows, but any more of a significant low move beyond that, I just don't simply see it. We have a resistance here at 97.06. And that concludes it here. Well, we'll catch you in the chat room, and thanks for joining us here on the final day of the week for European Crossover Web.